All right, good evening, guys. Ken at Tortoise Capital. This is a partial review of the trading plan for today, May 13th, 2022. I will follow up with the reports later tonight. I've been in my sick bed today with reactions to the combined flu shot, COVID booster, and shingles booster that had me knocked out for about 15 hours today. So, what I want to do is go over the trades that the gang made, and then also follow up with some of those monster trades that we set up yesterday, with the belief that those could really be something extraordinary, and in fact, they really were. So, the first one I just want to cover in no particular order is EWZ. We saw that it had closed well. It was at the high end of a daily move. It was resisting the sell off, unlike its peer group. This red bar you'll see is the first 3-minute bar, including the gap, which I've added to all the standard charts, so you can see that, right? And then just simply, I just want to show that if you just play the regular breakout, and then you use the range stat divided by 10 is 13 cents. So that, this is what 13 cents looks like. 63, 67, 57, yeah. That's what 13 cents looks like. So you never get close to exiting, even if you're just using a trailing stop, until you get up to the peak of the RL10, and it comes down, and look where it gets you out. If you just used the crossing of the dragon or the PSAR dot, you're pretty happy with that, because that's going to give you 1, 2, 3, 3.5 R with the simple breakout and trade following. So that's EWZ. We said IYR would be amazing. U.S. real estate, and it surely was. On this one, you play the 1, 2, 3 entry after the big gap, so it gaps up, sells off, does not close the gap, and then resumes. So you just play the 1, 2, 3 entry, and I'm showing all these on 3 minutes just to give you a feel for how big those moves are. And in IYR, I gotta add that just a minute. IYR's range stat divided by 10 is 33 cents. So if we look at 33 cents, that would take us to 94.23. So that's approximately 33 cents. And again, never threatened all the way up until you get the PSAR. You also get later in the day a very nice COTA 2, and that's not even trying. And you might have played the COTA 2 to the downside, but to me, the long side was the only way to trade. You could have, so you had a nice trade here. You had a second breakout COTA 2 here, which would have probably gotten you a fraction, and then the third one here. So IYR was amazing. PBW, the clean energy, was off the hook. That one has a 37-cent risk box. So that's 46 even. So that's about 40 cents right there. And when you play the breakout, you get essentially that trade with that risk. And you get to enjoy that one all the way up, I think. You probably would have gotten out here or here or here. So I take that to be the move. You'd have probably gotten that trade which is about 1, 2, 3, 3.5. We looked at Ethereum. That one had just an extraordinary run. Also, big gap up and go. Ethereum's range stat is 20 cents, so that you get paid in Ethereum. Basically, anywhere you look today and follow this idea, you got paid. And what's important about this is the idea that that was the least surprising move of all. That what the sniper and the Godzilla trade frames are doing for us is that it is reminding us to start each trading day with a fresh perspective to see what price is doing. So you have a long term, you have a midterm index, and then you have a tactical short term posture. What makes all of these really special is that there are 3 places in the long term: the top 10%, the bottom 10%, and the middle 10%. And then on the midterm, the top 10%, middle 10%, and bottom 10%. Any one of those creates a uncontroversial critical state for that symbol. And then if you add the volatility of 5 days, what that does is gives you something like, day 1, 2, 3, 4, 5, or if I say it another way, -1, -2, -3, -4, -5. And if you take the size of that 5-day trading range, you have now sort of blended the volatility feelings of multiple traders. You have intraday traders here. If it was a huge day, they think it's a hugely volatile day. But a 5-day swing trader, really needs to see all of those. So if the aggregate of these ranges is large, then it predicts a follow-through will also be large, because everybody will see just how much it has gained. So the continuation breakout of that can be really large, because it's just going to be more of whatever the previous was. But if that thing was also harsh sell-off and is down near the bottom, or even in the middle, anywhere inside that range, it could have been this, as long as there's a 5-day dramatic volatility that is much greater than the last 35 days. So this is 30 times 5-day look-back periods here, or in other words, 150 days. And this one is 30 days. So in other words, 6 5-day segments. And then this one, the volatility is a 1 times 5-day segment. You're getting a sampling of today's volatility against much longer term 5-day period. So you are actually encompassing not only the 5-day volatility of the short-term traders, but you're really looking back almost half a year and trying to characterize the 5-day range with respect to the very long-term trading characteristics of that symbol. So when you get a critical state like bottom and bottom plus volatile, it almost doesn't matter where the tactical 10-day trade is, because you could be looking at that as, a 10-day on daily bars. You could be looking at 10-minute. You could be looking at 30-minute. You could be looking at 60-minute, 2-hour, whatever. Whatever tactical time frame you're making your decisions on, you would actually love to see that the tactical time frame is also near a critical state for large moves. But that's just like gravy, all right? That just means that the move has started uncontroversially. What sets this thing up as a sharp change in psychology is the combination of the long-term location, the midterm location, and the volatility, which is either extremely narrow, the last 5 days have been compressed to a sideways quiet channel, and then the breakout is obvious to see, or it was such a wide channel that the first leg is already in, either up or down, and now it's either going to be a continuation or a return from either of those extremes. So what this does is tell you when to expect a panic reaction by all the people that are following that stock, because it's in a dramatically special critical state that is abnormal compared to its long-term and mid-term look back, combining with the vigorousness of the move. So we should have been the least surprised people in the market today when we saw all of these symbols taken off, because they were all at such extreme conditions that, of course, with any gasoline thrown on that fire at all, you're going to get a massive move, and especially on a Friday going into the weekend, and people want to buy things on sale, so we say, oh, well, just keep holding it over the weekend because it'll be all right. There was one big day. I mean, that's sort of the classic psychological trap to stay in. So if we go back and look at excuse me, IWM yesterday, that one had a very tiny little range box at the very bottom of his segment, and that's just the 1-day move. And EWZ had already put in a nice little recovery, and then today's follow through that gets it through the dragon is easy to believe in. PBW, which had been murdered on the long run, remember PBW had gone way down here and had an intraday bounce, but it was still terrible. And well, today all it did was just go up after a gap and go. So that's not even an extraordinary move, except when you look at the time frame that we're trading, that was about the least controversial momentum-based single direction trade that there ever was. That should have been the easiest trade ever made. Tesla had a more of a chop day, so it doesn't always work. Treasuries had a sell-off as money was flowing out of defense into offense. Diamonds had a nice recovery today. So the point is, by understanding the framework, understanding the lens, you're going to disconnect the herd psychology from your own interpretation of what's going on. You're simply going to be looking at the market as more or less a critical state opportunity based on reasons, right? And that is such a powerful edge that you will not be surprised by big moves in either direction. I guarantee there were thousands and millions of people that were surprised by today's move that could not trade it because they couldn't believe their lion eyes. And because we're not bound by that, we can actually trade the way we want to trade. Alcoa was nice today. So, IYR, PBW, EWZ, every single thing that we looked at yesterday was just amazing today. I wanted to give you just a quick look at my son's spreadsheet here. So this was yesterday's spreadsheet, and I've downloaded the text file he sent me at 1 minute after the market closed, and all I have to do, I've loaded that into a standard location on my hard drive. I go to data, and I refresh the connections. And then in about 15 seconds, all of the index numbers for the weekly, the daily, the tactical, and the z-score for volatility are completed. So then I hit the volatility filter. So this filters it only for abnormal up and abnormal down, and it sorts by the z-score. And then I run the Godzilla frame, and those are the Godzilla patterns in the S&P 500. So I'm going to let's see. I'm gonna get my little snagit. A lot fewer Godzillas after a one-day enraged move. Right? Tesla, Microsoft, Disney, Conoco. So I'm going to save that as Godzilla. Because that file, g.png, is hot linked into my report form. So now that one is now there's other ways to do this, but I like monkeying around with these. So now I'm going to hit I'm going to clear the Godzilla filter, hit the fireworks, and see if it ain't. So there's no fireworks. Then I'm going to hit the barbecue. And the barbecue finds things that are stuck in the middle of their weekly and their daily, between 40 and 60, and then are either extremely volatile or extremely quiet, because that's the ones that are most likely to make a surprise move. The ones that are already moving, or the ones that have exceptional compression. So then I'm going to collect that up. So that file is B for barbecue. And then the last thing I'm going to do is clear all the filters. And then I'm going to sort it by largest to, or no, quietest, I guess I want. Yeah, that's what I wanted. That's pure quiet. I want smallest to largest on the z-score. And I'll take probably everything that's minus a half volatility, a half standard deviation, z-score of minus 0.5, and quieter, because those are the ones that I would expect to be the most likely to have an explosive move. And I notice right down to about there. So those would be the pure quiets. And now that's all the ones that I need for tomorrow. That's about 40 different setups that are interesting. My thought is that a guy like Tucker, who understands options and straddles and breakouts, the pure quiet one would be exceptionally interesting. So I'm going to save that. That's the Q. Q for quiet. So that's that. So I'm about halfway through generating all the stuff for the daily report. Now what I'm going to do is take a look at the traders today. See how you guys did. Here's Tim. He felt a little beat up today, so let's see what we got here. I'm going to say this one. This one is slow to enter. The entry should have been here. This is where he started, and the entry happened almost immediately. When that takes out that bar, that PSAR, the entry should be right here. Then when this runs down and peaks, now this is where I want you to notice the fact that it does not get all the way to the VWAP, which is rising. So that's actually under some buying pressure. The fact that it cannot close that gap, but then starts to raise up, and then you see these three little real bodies. To me, you got to get out right here. That you gave it 1, 2, 3, 4 bars to fail, and it didn't. All it did was just lock that in. So now on this one, you can gain from here to here. And on a standard risk box, that's going to give you about 1 or 1.5 instead of minus 0.2, and that takes away half of the damage. This conversely is slow to get in. The PSAR entry would be here. You know, the 1, 2, 3 entry where it crosses the dragon would be here, but I like the PSAR entry. So that's where I would be. You know, I don't want to over-optimize this thing. That's where I think you want to be entering right there. And then the exit on that, again, this thing is supposed to go immediately. It's supposed to get through all of this. It's supposed to get through that and supposed to get up to here. And if it's really going to be a strong move, it should get through that and go. It should get through this and go. But instantly, after you bought it, it started to roll over. It's got 2 immediate bars against you. So cut that one right there. It just didn't work. And now, instead of exiting here, you exit here, and that takes away about 1 hour. So just in those 2 trades, your deficit for the day is erased. Now, I think that you could get short here. On a 1, 2, 3, I think you can get short here instead of here. And then if you get short here, even the exit that you took is now in the money. But to be honest, after 1 and then 2, and then it doesn't fail any further, like it holds support at the VWAP and then starts to resume, I would just get paid right here, and I would take this trade from here to here. Because you're trading on 5-minute charts. That seems like a lifetime. So trade from here to here. That's a winning trade. Then this exit that you took is now the entry. Instead of here, you're getting an entry here. And then on this one, when it finally gets through this, and then it gets up to but not beyond, and it gives you a doji and starts to fail, either right here or right here, you have to escape and get paid from here to here. That's a winning trade. Then this one gives you a shot down to the VWAP, so you can get long here and you probably scratch. This is a good scratch. That's a good scratch. This one, if as soon as this doesn't go higher, just get out, because it has had 1, 2, 3, 4, 5 times that it's tried to get through that, and it didn't, and it rolled over each time. So trust it. It's telling you. This is a pretty good short, and this never went negative, so my spider sense is that we should have been able to exit about here and then get long about here. And that, just those slight improvements will turn a minus 0.23 day into a positive 2 day. So be more skeptical. And that's a challenge as you become more comfortable with standard patterns, is that you, hey, I've seen this before, and I remember the times that it went in the direction that I wanted it to, so I'm going to stick around a little longer, which means that it's longer for you to get out and then longer to get back in the other direction. So we got to eliminate that stuff from our vocabulary. We've got to be more simple-minded. All right, let's see what we got here. This Marius. So this is about a 1.2, I'm guessing. Yeah. So he's got a high, a low, a lower high. If we were ever going to be short, this is probably connected to the NASDAQ. That would be the one to be short right there, because this gives you, this is on the other side, and it's before the absolute collapse. So you can actually get that one in hand, and then you can get to no lose as it's making the final sell-off. This is a great entry. Great second position. Great third position. It broke out in either way. You know, this is fine, and you got paid. That's pretty good. That's 5.5 R as I'm reading it. He's got this one, I guess, where he's sleeping, so he's just saying this is where he would be looking at getting short if it breaks below here, I guess, is what I'm guessing. And he would be framing it as a potential 3. He's asleep. Quick scratch. This is one where the we stuck around too long. So we got 2 positions in and let them both go negative. So this is a case, in my view, where if you are quick to get your second positions on, you can't let them come back to where the first position, which was in the money, is also negative. We can't have that. That's a good trade there too. So this looks like around probably 5R for the day. Pretty good stuff. Here's Phil. Here's the bottoming pattern. There's the either here. Yeah, that's the indicated entry with the standard risk box. This one went up and then it came back, so he was determined not to let that go negative. I agree with that. And then he got the re-entry and then got paid. This one, I think you could get in here or here. Instead of, this was just a little late. On the 5 minutes, it looks like it's forever, but really in a 5 minute, that's a long time. So this was a little slow to get in, I felt. This one went to here, came up, and then started to roll back. And it looks like he exited and then re-entered, had a little favorable, and then took a micro loss. So your life will change when that little minus 0.2, when you are stricter, and you turn that into 0.2. Just that little bit is going to make a huge difference in your life. And then, when you get above this, you got a low, a higher low, and a universal entry on the 5 minute. So you have this powerful move that is positive, right? Should probably use a big fat, yeah. So you got this positive move. And then it pulls back and then recovers all the way back to here, opens, makes a higher low. So this is actually a 1, 2, 3 re-entry right here, and then your standard risk box, bring that sucker up there. You're not going to lose money on that trade. You would probably get out here or somewhere around here, and you will take either one of those trades all day. This is, I think, a 1, 2, 3. I'd like to see you get out here at a scratch rather than here. And again, given the size of the positive move and the second leg up, the fact that this did not fail to the PSAR, did not fail to the VWAP, did not fail to the Bollinger Band mean, maybe you can exit this and then maybe enter here, and you might have gotten paid in this. But still, 0.8. And here's some good psychology. And again, you want to know what is the number of your average win, so that you know when those things move in your direction a certain way, what's the difference between, here's the move up, and I'm holding this price, and if my average win is here, I don't ever want to let this thing go below average. So wherever your stop was, you would immediately jump it up to average win. So you want to start knowing that about yourself. Marius. I think this is a... I'm not sure that I'm reading your chart correctly. I think your entry long was here. Does this mean that you exited here, or are you exiting here? Because the box tells me that this was a trade, but when I first looked at that, I thought that was the trade. But this is looking like trade 5, which was this, and a second position, and that's the one that turned negative. Okay, all right, so, okay, I understand now. So this was a quick scratch. Yeah, and then this one is 2 quick shorts, and then we let this go all the way to where the first entry got negative. So we turned a winning trade into a losing trade on double positions. So just trade one position until it's boring. Okay, I opened that one twice. So Tesla. Okay, I need you to standardize your symbols for entry. If that's going to be your symbol for entry, then keep it that way. And I take it that's your exit. That's a very good exit, because now you kept that piece. Very good. That's about all anybody get out of Tesla today, to be honest. Woj with the WMB3. It was down a fraction for the day, but was up 13R for the week. So we can live with that. So he's kind of grinding and then gets paid when it's there. Grinding, gets paid. Grinding, that's a lot of trading. Gets paid. Grinding, gets paid. Grinding, gets paid, gets paid. So I just think this was probably excessive, because with 1, 2, 3, 4, 5 trades that paid off really well, we should be better than minus 0.4. What that means is that all of the micro losses are grinding up the 5 big wins. So I think you just need to back off the accelerator a little bit and take a look at that. Yeah, I mean, I don't know that on expiration day that I tried to get even more aggressive. Maybe that's the one where you just chill a little bit. So this is about 3.5. This is about 4R for the day for Tucker. That's a good one. That's a great one. Good patience, wonderful patience, and excellent payday. Yeah. This failure to fail further and then the breakout. Good job. Nice work. The 5 minute Aussies. Session 1, 4 trades, 1.2. Session 2, 11 trades, 2.3. 7 and 1.1, so that's 3.4. That's 4.6. Good reversal in both cases. Got paid. I think pretty good patience here, but you did get into the K2. The hard one on that one is saying, oh man, now that I'm here and see that it's working, I now should have been here, and it encourages you to be more aggressive earlier, but that doesn't always work. So I like the patience after you have a rising channel of declining volatility. That's always good, and you got paid for what was there. This would have been tempting, as would have this one when those tight little moves. But I think you were out for the day, and then you're getting paid pretty well in there. That's good stuff. EWZ. Oh, I'm sorry. This was DIA. Shifted just in time to DIA. Rats. So the morning move was the bigger move on this one. Um, Perfect. Found support above the VWAP. The whole market is up. He gets paid. This might have been tempting. This one, when you got those higher lows, if you were ever going to be a tactical intraday trader, that would be the shot you take because you get a very small risk to the very favorable reward, which ends up getting paid. And then when this thing doesn't fail further, then you get a quick exit at the VWAP, and then you might have gotten a little quicker entry. Instead of here, you could get here, and then this would probably be a scratch instead of minus 0.5. And now you've got an afternoon trade of all these declining lows, and when this breaks, very tempting. And then when this rolls over, very tempting. Ooh, yeah, good job. So I think there may have been a little bit more in there. But then you've been using EWZ more than DIA, and it moves a little differently. You might try that one. Okay, that's on 1 minute, so you might try that one on 2 or 3 minute. It smooths it out a little bit more. And this one is DIA and the collapsing dragons. Yeah, 1, 2, and one that didn't pay. So big pay. This would have been tempting as a second position, or even this one if I'm being honest, because it takes out that. That's really attractive, and then this one reinforces it. So we might have had 5 on that one. Which is odd because today was such a big. I was thinking DIA on the 3 minutes, Griff. EWZ moves a little more smoothly. There's not anywhere near as many traders, and there's a lot of index trading for the Dow components that are pushing the DIA around. So it tends to be a little muddier, and you might want to wait for 3-minute chart to see the price levels really clarify. IWM has a certain quality like that too. Brazil and Mexico are so narrowly focused and much more narrowly traded that you get cleaner, purer signals on those, in my experience. And then finally, Luke brings in the 5-minute Aussie.